Good morning, everybody. Welcome to the Gold and Silver Club weekly report. Guys, there were some technical issues on Monday's weekly call, so what we're going to actually do, the whole presentation we had ready for you then, the top trades of the week, we are going to show you those as well as what's happened this week. It's been a very interesting couple of weeks with non-farm payroll last Friday and then the US elections this week, Hurricane Sandy last week. We've got lots of content to share with you this morning. Okay, so first of all, today's session we're going to be reviewing the latest development in the commodities markets and analysing the week's performance. So this is going to be a live session. We're going to cover an end-of-week summary for gold, silver, oil and commodity currencies. We'll look at the top trades of the week, actually the last 2 weeks, live market commentary and technical analysis. We'll look at the week ahead, so key events looking forward and any questions and answers at all. Okay, so good to see some familiar face on the call and some new people as well. So welcome if this is the first time coming onto the Gold and Silver Club weekly review. Okay, so just a little bit about myself and Nick Kalsi. I'm a professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialise in teaching people how to make money from trading the biggest financial markets in the world, so Forex, gold, silver and oil. I've trained hundreds of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. I'm also a regular contributor to a number of financial publications and speak at numerous trading seminars and workshops. This is Nick Kalsi, who should be answering your questions on today's call, if there are any questions at all in the chat function there. And Nick began his career within private. Nick is a professional trader, investment analyst and speaker. He began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, he spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And it's through Nick's first-hand relationships with some of the world's most successful traders, he's discovered the formula, mindset and tools that give any individual the definitive edge to make money in any economy. He also regularly writes for a number of global and business publications, and we both frequently appear on television, recently on Swiss TV. We'll show you those as well. This is the Gold and Silver. This is some of our recent press this year, if you like. This is business.com, just a South African international life magazine, just to give you an idea of some of the publications we've done recently. This was an interview we did for Swiss TV just a couple of weeks ago, just talking about gold and silver forecasts over the final quarter of the year and what we expect to happen during non-farm payroll US elections, and we'll talk through that very shortly. Okay, so we're just going to quickly gauge the gold price right now. So we've had quite the move in the last week or so, particularly since Friday's non-farm payroll. So if you want to just cast your eye to what the gold price is currently, we'll just have a look at that. So does anybody want to tell me in the little chat there what the price is at the moment, or if you're new to this call, would you like to guess what the price of gold is per ounce currently? I can tell you since last Friday we've had circa around a 500-point move on gold, so it's been quite a big week. Excellent. Okay, spot on. So Ray, you've got it. $1,730 an ounce at the moment is the spot price of gold right now. So this is actually what I wanted to show you as well. This is a 30-year seasonal chart of gold versus the 2012 seasonal gold. And what you'll see there, so this is the price of gold, how it moves every single month of the year over the last 30 years. And what you'll typically see, and this is overlaid with the chart for 2012. So what you can see there is in the early months of the year, in January and February, we did have a very typical rally in the early months. Then we had a sell-off in March that actually continued into April. We had the sell in May and go away. And then during, which is typically coined up for the metals, we see weakness, generally speaking, over the spring. You'll see during the summer months, June and July, we had the markets just really moving sideways. There wasn't too much going on in volumes, which was great to trade, just very much range-bound trades. And then very cyclically, we actually saw some big movements towards the end of August. Coming into September, we had a massive move on gold. Gold went up over 10% from the end of August to the end of September, and silver did over 25% in that same time frame. You can see here exactly where we've actually had a market correction in October. So you can see where the price is actually, this is very common as well, that you're seeing gold seasonality in October for the market to take a dive like that, and that's very common for the stock market as well during October. And we've seen that happen again this year, and right now, very interestingly, we've just come off a bounce of 1674 last week, where we bottomed out for the time being, and that was just after non-farm payroll. And you can see here, hopefully, where we are actually at the moment. So the 8th of November, we're beginning this uptrend back again. And this, we've actually seen, so we've seen the price go from 1674 to 1730. We're just breaking out a little bit last night as well from this resistance at 1730 level. So very interesting to see if we're, in terms of the cycle for gold, we do expect November is typically a bullish month for gold. So going back to the 30-year cycle and going back to how 2012 is performing compared to the 30-year cycle. Okay, so I just wanted to cast your eye on that, because we do pay close attention to the seasonality with our trading for the commodities. Okay, so now we're going to look at the top trades of the week. So we're going to include the top trades of last week, because we weren't able to get on the webinar on Monday. So here are the top trades of the last week. So this was actually non-farm payroll, and this was last Friday on gold. And here you can see we had a level of resistance of 1721. This was a price action level and a Fibonacci level as well. The price came up and it tested that level. It couldn't break through it, and there was a lot of speculation that the employment numbers in America had done rather, that there had been a lot more jobs created over this last month, and the figures, all the sort of data that was coming out was alluding to the figures coming out as strong, in which case we would see a strong dollar and the commodities go down in price, because if the dollar gains strength, you'll see gold and silver go down because they're priced in dollars. Okay, so on this particular trade, non-farm payroll, we actually were in a position just before that. The non-farm payroll news came out, and we had a massive sell-off to the downside. So our entry point there, 1721, came out 1688, which was an important support level. And it was a 332-point trade there. So for 90 pip risk, you see $900, it was 3,320 in profit if you trade in lots like ourselves, and it was a good 3-to-1 risk to reward ratio. But what is interesting about this is that the following week we had obviously the elections, which are about to come out on Tuesday. We were preparing ourselves to see if we were going to get a bottom in gold. We know that gold in November is typically a bullish month, and if we could get in at a really good price, a tight price, off that non-farm payroll low, we expected a big move. And here we had Obama re-elected as 44th President of the United States, and we had some massive moves. So this is actually where we got in just on the Friday on the low of the day, 1674. We actually bounced off this Fibonacci level. It was a very small risk required for this trade, so it was only a 40 pip risk, or $4 risk. So on this particular trade, from getting in at 1674. We held that across Friday. We actually came down, retested that on the Monday, and then we saw the market just start to rally off that. And we actually, off news, when there started to be news coming out of America that Obama was ahead in all the stats which were coming through, this actually propelled gold on Tuesday, and we could see within a very short time frame we had almost a 200-point move. We were already in the trade anyway, so we capitalized on that, and here you can see that we actually had a 394 point move to the upside. So we've reversed position from the bottom, and we've taken advantage of the whole move up as well across the early part of the week. And there you can see we've actually got ourselves a 9-to-1 risk to reward. So we risked 40 pips and we made 394 there. So $400 to make 3,940, and that was very very much news driven that we had such a big move as well, but we were already well positioned to take advantage of that. So that's an example just on gold there of our top trades. Here we have USD Canadian dollar. So USD Canadian dollar, this was a sell short position that we had on USD Canadian dollar. Again, this was last week, and we came to a level of you actually see it because we've come and retested that level today. We'll talk you through it. We've come up to this level again. It's presenting a strong resistance at the moment. You only need circa 20 pips that we needed to stay in this trade for $200 risk, and then we came down to our profit target, which was 84 pips, which was 0.9925 for a 76 pip trade there, with a 3.5 to 1 risk to reward. Now, what I think you'll find interesting again is that we were able to reverse this position again. So we've essentially, instead of going short, we've now gone long. We came down, and where we actually come out of the position, we've been able to re-enter. You can see this level has been supported by a Fibonacci level there, and also supported by some previous support. So we've come into that trade fairly tight again, not required huge amount of stop loss on that 16-point stop loss, and the market has just rallied all the way back to that exact same point where we sold off from previously. So exited at just 1.000 there for a profit of 117 pips, which we actually came out of just on Wednesday. And yeah, so you can see where we've actually we've just reversed the position, and that was actually a fantastic risk to reward. So it's a 10-to-1 risk to reward on that trade. And then finally, we're going to look at Australian USD, which moves pretty much very, very strongly correlated again to gold. So when we had a short on gold, this presented a very good opportunity to go short just before, or during and just before non-farm payroll. So when the bad news came out, we got into a nice position. You can see there where we had a level of resistance. We sold off from, again, a price action level. So we've gone in at 1.0394. The price has tanked essentially on the news. So we had a 23-point stop. We've come down and we've essentially made 66 pips on the trade, so $230 to make 660 at a 3-to-1 risk to reward. And here you actually see again where we've reversed position. So we've come down, and more or less the same time as gold has been supported. We came down and we got supported by a key level again. There's a key support level and also a key Fibonacci level. Price was supported, and very simply we just reversed our position. So we were able to then get in long for even bigger trade. Fairly tight stop needed on that again, because if the price was going to break through that level, we knew that the momentum was going to be strong to the downside. And here you can see, so from a 12 pip risk there, we've come out with 99 pips on that trade, just essentially riding the momentum back to the previous level where we encountered resistance there. And you can see we encountered resistance, we broke through it, and we've just consolidated along there. So it's $120 risk to make £990 on that trade. So you can see there 3 examples of how we've traded really the non-farm payroll, and we've been able to subsequently reverse all our positions and then trade the opposite direction as we've had the election news come out. Okay, so now what we're going to do, we're going to have a look at some live technical analysis. Feel free to post your questions as well whilst we're having a look at the markets. So any questions you have, do just post them in the chat. Okay, so the screen's just loading up there, guys. Should appear on your screen very shortly. Okay, good. Right, so what we're going to look at first, we're going to have a look at gold. So what you can see on gold currently is this is essentially the moves we were talking about previously. So this is where we had non-farm payroll. We've had this strong level of resistance. This is where we sold from, and you can see here we've actually now come to, this was the 1674 level, which we showed you one of the top trades on. This is where the price has been supported. You can see it's only ever so slightly broken through that, but it's been strongly supported, and we've had a complete reversal, and price has come back up to this resistance level. So we broke out of 1727 last night, and really we managed to close above that level. During the Asia Pacific market, we still continued the momentum. We've got up to around 1737. You can see if we're coming down to test 1727. So interested to see now if this level of resistance is now going to become support, or whether we're going to see, if we come down to retest it, whether we're going to see the next leg up now really for gold as we see if this is supported and we start getting this sort of a movement to the upside. So what would be targeting typically on a breakout of 1727 is we're going to be looking at two levels. One, we know there's a level of resistance around about 1750, around about this level here, and the next fib level up is 1768. So those looking at long positions on those are kind of short-term targets. Obviously, if we do break through and we see any weakness, there's not a whole lot of news coming out which is really going to be big drivers today. So we may just see the price just drift up or drift down and come and test these lower levels. If we do that, certainly the price action is on the side of the bulls at the moment, from the big move we've had here, from the support, from the seasonality of November, and the fact that we've closed above this fib level last night. We haven't really broken through that. We're just coming up for a test on gold at the moment. So we're very interested to see if this level is now going to hold and we're going to have a new leg up for gold. So now we're going to take a look. Actually, one thing I want to show you is the commodity currencies. So with the commodity currencies, we've actually had some, you can see right now actually, USD CAD. So this is where we have actually, you can see where we've had this strong level of support with USD Canadian dollar, where we've come down and we've tested this level, which was a trade that we entered long, and you can see right now we're coming up to test these resistance levels again. So if we can't break through, it's around about let's have a look here, 1.000030 is that fib level. So we'll be seeing if we can get a breakthrough past this level of resistance. So as gold and silver rally, you typically will see USD Canadian dollar go down. So if we continue to see USD Canadian dollar go upwards, you would expect gold and silver to come down. However, if we're going to start seeing a sell-off now at this resistance, you would expect this market to be coming down and gold and silver to be breaking up to the upside. So we're keeping a very close eye on USD Canadian dollar at the moment. We want to see if we're either going to get a breakout now, or if this is going to again present a level of resistance, and if we're going to get a move to the downside again. So we're right at that fib level, right at that resistance. Obviously you can see the risk to reward on that. Just look in terms of where we've previously come to there. So from the current price, we've got about 16, 17 points above that is where the previous high was at the end of October. We're just going to cast our eye to New Zealand US dollar, and at the moment we've come all the way down and we've tested, actually had a big sell-off during midweek on yesterday actually. This was on New Zealand US dollar. And here you can actually see we've come down and we're currently tested. First of all, we've been testing this fib level here, this price action level, and at the moment we want to see if we're going to continue to come down and retest this level of support. So looking at around about 0.81090 on New Zealand US dollar at the moment, and you can see it moves very well between these price action levels, and we're coming down to just test some pivots as well. So this is a level that we're keeping a close eye on at the moment for New Zealand US dollar. Look at Australian US dollar. Okay, Australian US dollar, very interesting as well. So we can see here where we've clearly had a level of resistance and we haven't been able to break through that, so the price is actually reversing again, and we're coming down here, so we would expect a retest of this price action level here, this fib level. Whether we get supported there, we'd be paying close attention to, just based on the candlestick setup there. If we're going to get a doji similar to this one, where you see a dragonfly doji where the price just gets rejected, you can see buyers are coming into the market. So we want to see if we're going to come down on Australian US dollar, come and retest this level, and whether that's going to be supported. If not, and this level isn't supported, we would expect quite a high momentum move to the downside, and potentially we're going to see another level of support retested for Australian US dollar. So that's just purely looking at price action there on US dollar. You can see here where we've actually had quite strong areas of support previously at this level, and also you can see where the price is potentially going to, let's just have a look a little bit closer, where we're potentially going to see a bounce shortly. So we'll keep a close eye on that. There are quite a lot of setups at the moment that we're keeping a close eye on. As you can see, New Zealand US dollar, Australian US dollar, USD CAD is testing this this resistance level. So certainly lots going on in the markets today, lots of kind of setups that we're keeping a close eye on. Going to just take a look at some other markets at the moment which are testing some key levels. Here you can actually see, that's interesting. So we're now getting on New Zealand dollar, Japanese yen. You can see we've had a level tested during the Asian session. We're actually breaking through a price action level now. We're just going to quickly take this across to US dollar, Japanese yen. Purely because these are some setups we're keeping an eye on, guys, just on the price action side. So you can see here we've had a huge sell-off over this Japanese yen. We've come down, and we're currently testing again another price action level, key level, which has been supported since the 18th of October. So you can see that we're right at this level at the moment. So you can see here where this level has been supported previously. So if we do get supported, we would expect to bounce back at least towards the next price action level upwards, or if we break through that, we would expect the momentum to continue. There's not really a lot of support until we come down and retest the 23.6 retracement level with USD Japanese yen. And we're just going to quickly have a look at the euro as well. Okay, so the euro is coming down. So the euro is correlated fairly strongly at the moment still with gold and silver. So if we see weakness in the euro, as we're seeing at the moment, we're getting a slight break there of a support level, of a Fibonacci level. We would expect potentially some weakness in gold and silver as well. So if we do continue to drift lower with the euro today, if we come down to this 23.6 retracement level, which is going to be around about 1.26340, we would expect some weakness in gold and silver today. And if this level is supported and we get a move to the upside, we would expect gold and silver to strengthen as well. Okay, so we're just going to have a quick look at silver now. Now, silver has actually, during the last week during Hurricane Sandy, was fantastic for day trading. We had 2 days there, Monday and Tuesday, where the markets were essentially closed in the US, and all we saw was just all these quick bounces from this 31, it's about 63 fib level, and we've seen bounces off that again yesterday. So essentially, we had a number of trades where we're really range bound at the moment. We had a big dip down, which was during non-farm payroll, but you can see where we've come back, and this 31.65 fib level is really providing a lot of support there. So we're just moving very range bound in silver at the moment. So there's been a lot of day trade opportunities, sort of scalping, where we're just getting in and out for like 30 points on silver there. We've just come down, tested, come up to the resistance, been able to sell, come down and tested. So silver's very much range bound at the moment. So we're waiting really to see if we may just continue to come down. There's not a lot of big news coming out today. We may just continue to come down to test this fib level and bounce to the upside again and see this sort of movement continue, or we are anticipating at some point a breakout either way from this range that we're stuck in. We thought we may get a breakdown towards the $30 an ounce, but that didn't follow through after the election news came out, and we're just back right up within this range on silver. So also watching to see if we're going to break. We looked very close, we were going to get a breakout last night on silver. That didn't follow through, but we would, if we're looking at a breakout, we'd be looking to then target around a 33 per ounce level. We're just going to cast our eye quickly to crude oil. Crude oil has been very volatile in the last week or so, and quite a lot of that has been down also to the hurricane last week in the US and the effects that's had on the oil supply and the refineries and the productions out there. So we've seen a very volatile market, which on crude oil here, you can see where we've had this 108.43 fib level. We're just seeing the prices chop up and down between that at the moment. So you can see where we've had non-farm payroll, the prices really, we've had a big whipsaw. So the prices came down on farm payroll, and the prices, we had a huge rally on crude oil on election news. So we had a 700-point move after the elections, when the US dollar essentially was weakening after the news of the election, and then we've come right back down. And we're just generally staying between this 107, really consolidating between this 107 and well, actually the range on this at the moment is 104 to about 112, where we've been stuck quite recently, but very much consolidating around 107 to 109 at the moment with crude oil. So you do need to have your risk management needs to be correct when you're trading crude oil. With these big whipsaws in price, you're going to be stopped out a lot if you're trying to get in on these big moves, unless you've got a fairly loose stop on those. So in terms of risk to reward, we don't like the price action so much on crude oil this week, unless you're trading based on a news strategy. We have a news strategy we trade, which you can use during oil inventories, and also for when we have big news like non-farm payroll or for US elections. But other than that, at the moment the price is very choppy for crude oil. There are better setups available. So that's really looking at gold, silver, and the commodity currencies at the moment. So here, let's just come back to gold again. We'll just zoom out ever so slightly on gold, and we're just going to clean up this chart a little bit. So we're going to look at what the seasonality is showing for gold right now. And by seasonality, what I'm talking about is often we get a sell-off in October, and then we get a rally in November. That's just your basic seasonality on gold. So we're just going to quickly clean up the chart and show you that. Okay, so what you can see here, so we have had a market, we have had a sell-off over October, which you can see we've come down, we've bottomed out at a key price action level there, which you can see we've come down to 1674. We've tested this level, and at the moment we've just broken above 1727. We closed above that last night, above this price action level. So at the moment we are curious to see if this 1727 is now going to become a level of support, and whether we're now in for the next leg higher on gold. So we'll be watching that very closely. And yeah, that really wraps it up, guys, for the end of week report on gold, silver, crude oil, and the commodity currencies. We're going to talk about the news to look out for next week as well. Okay, so looking at the week ahead. So the week ahead, guys, for the commodities market and what affects gold, silver the most, I mean, really we're looking at some key events. We haven't got a massive amount of key news coming out next week. It's obviously been a very news-driven month towards October and the beginning of November, with European Central Bank meetings, with the elections, with non-farm payroll, with Hurricane Sandy. So there's been a lot going on. So next week is going to be somewhat of a quieter week. So some major news we're going to be looking at. Tuesday at 10 o'clock, we've got the German Zoo economic sentiment. And essentially, the German Zoo economic sentiment is an index which gauges the 6-month economic outlook. So it's a level above 0 indicates optimism, and below that indicates pessimism. So it's compiled from a survey of about 350 German institutional investors and analysts. And typically, a higher than expected reading should be taken as bullish for the euro, while a lower than expected reading should be taken as bearish for the euro. So that's important because of the correlation euro has with the gold price. On Thursday, we'll be looking at Euro GDP. So this measures the annualized change in the inflation adjusted value of all goods and services produced by the economy. So again, lots of euro news coming out. A higher than expected reading should be taken as bullish for the euro, while a lower than expected reading should be taken as bearish for the euro. So that's next Thursday at 7 a.m. And also we've got next Thursday GBP retail sales, and that measures the change in the total value of inflation adjusted sales as at the retail level. So a higher than expected reading should be really taken as bullish for the pound, while a lower than expected reading should be taken as bearish for the pound. So if you're trading at cable, that's a very important pound dollar. That's an important announcement to look at. So If you'd like to be kept updated, guys, we've covered one of our strategies today, just talking about, we're looking at price action, not going into too much detail of the specific, all the 5 kind of point checklist that we do with those trades, but hopefully that gives you a nice overview. If you are interested, I know we've had a lot of calls recently to learn to trade, you very simply, you can go to our website, www.thegoldensilverclub.com, and there's a course form there. It's by application only. I'll just show you how that actually works. So it's just a case of going to the website there. You've got a tab which is you can click on just learn to trade, and here you'll actually find an application form that you can fill in with your details and just tell us what your current level is, whether that's beginner, intermediate, advanced, what markets you're interested in trading, and we can set up a conversation with you. We've got workshops which are completely full up for November, but we do have some spaces left on the December and a couple of spaces left in January. You can also go to our website and subscribe to the free weekly newsletter to be kept updated with the latest commodities market news as well on a weekly basis. And do feel free also to get in touch with us at office@thegoldensilverclub.com. It's office@thegoldensilverclub.com, or you can contact us on 0207 193 0403. So that's 0207 193 0403. Okay, fantastic. So that brings us to the end of the call, guys. If there are any questions at all, okay, we've got a few questions just coming through. Okay. Okay, so just a question from Peter there. I just probably need some clarification on that, Peter. Just talking with regard to the blue and green lines. I'm not entirely sure what you mean there, Peter. Yeah, Ray, you're absolutely welcome. Thanks very much. Interesting, great webinar. Thank you. And yeah, Peter, if you just want to clarify that, I'll try and answer your question. We're going to wrap up very shortly as we're coming to just after 11:30. Oh, I think actually, Peter, no, I can answer your question there. You're looking at the pivot point. So on the charts there, so we had the Fibonacci levels there, which we were looking at, and the green and blue lines you're referring to, those are our pivot points. So something that we use for getting into our trades as well. So that's what you're looking at there. Yeah, pivot. Yeah, that's absolutely right, Peter. Fantastic. Great. Okay, guys. Well, we have another webinar next Friday at the same time. So have a great week's trading. As I say, any questions at all, feel free to get in touch with us, and we shall see you on the next one. And have a great week. Okay. Thanks, guys. We'll see you on the next one. Bye bye.